Here are 10 books Warren Buffett recommends every investor read. Are you aware that Buffett's full name is Warren Edward Buffett? Having followed him for a long time, I just found out his middle name. What was his middle name? Let us know in the comments below. Well, back to Warren Buffett's book list. Number 1, Common Stocks and Uncommon Profits by Philip A. Fisher. Philip Fisher is one of the most influential investors of all time. In addition to being studied and applied by today's financiers and investors, his investment philosophy, which was introduced almost 40 years ago, is widely considered gospel by many. In 1958, he published Common Stocks and Uncommon Profits, a book that emphasizes networking and gaining information through business relationships. As a result of Fisher's recommendation, businesses with high profit margins, high return on capital, and growth orientation should be targeted for investment. He was famous for conducting thorough research on companies with which he would invest, as well as establishing a superior sales organization, leading the industry, and offering proprietary products. For research before buying stocks, he used his connections, the grapevine, and conversations. Phil's techniques enable an investor to make intelligent investment decisions by gaining a thorough understanding of the business. Number 2, Business Adventures, 12 Classic Tales from the World of Wall Street by John Brooks. Mr. Gates asked the Oracle of Omaha for a recommendation of his favorite business book in 1991 when he first met Mr. Buffett. When Mr. Buffett named this collection of New Yorker articles from the 1960s, he didn't miss a beat, as Mr. Gates recounted. Several notable and fascinating accounts of some of the biggest companies from the mid-1900s are included in this book, and they remain relevant today for understanding corporate life as they were in the past. In addition to revealing the machinations and volatile nature of the finance industry, Wall Street stories are filled with drama and adventure. Whether it is John Brooks' insightful reportage of the shocking market crash of 1962, the collapse of a well-known brokerage firm, or the bold attempt by American bankers to save the British pound, his reporting is so full of personality and critical detail that his work stands out. It seems history repeats itself every time. Number 3, Where Are the Customers' Yachts? By Fred Schwed. In this decades-old classic, humor is used to cut through the pretensions of Wall Street. Upon admiring all the nice boats in the harbor, a visitor to New York was told that they belonged to Wall Street bankers, which inspired the title. When he naively asked where the bankers' clients kept their boats, the bankers' clients could not afford them. As Buffett once said, it is one of the funniest books ever written about investing, yet it lightly conveys many important messages on the subject. In addition to offering wise contrarian advice, the book gives a true look at the investing world, where brokers get rich while their clients lose money. Investors continue to be exposed to the reality of Wall Street through this book. It's a light, fun read that you'll enjoy, plus you'll gain a better understanding of how brokers and managers work so you don't lose money. Number 4, Essays in Persuasion by John Maynard Keynes. The legendary author John Maynard Keynes wrote Essays in Persuasion, widely regarded as one of the greatest books of all time. Keynes' essays in this volume show his efforts to persuade the public over the period 1919 to 1940 with astounding accuracy in his attempts to influence events. The economist not only forecasted the economic fluctuations that would plague Europe and the United States, but also proposed measures that could have prevented a worldwide depression if they had been taken at the time. Today, Keynes is just as relevant as he was when he first expressed his views on Soviet Russia, laissez-faire, and economic growth. As well as the importance of its ideas and the clarity of the way they are presented, Mr. Buffett has highlighted this collection of writings from the noted economist. Despite his fame as an economist, Mr. Keynes also spent a considerable amount of time picking stocks. Buffett told Outstanding Investor Digest in 1989 that reading Keynes would make you a better investor. I doubt you would become a better investor in the market if you read Keynes. Number 5, The Little Book of Common Sense Investing by Jack Bogle. One of the best-known investors, Jack Bogle, founded the Vanguard Group and is best known for creating the first index fund. He has written numerous books, including The Little Book of Common Sense Investing. During a time when people tried to beat the market by picking great stocks and charging exorbitant fees for doing so, he thought, why not mimic what the indexes are doing without managing anything? The little idea eventually became one of the enduring investment ideas of the next century, as well as one of the world's most respected investment firms. Through this book, you'll learn about passive index funds as a sustainable investment strategy that gets you the retirement savings you need without all the hassles associated with investing in stocks. For the record, Buffett has frequently said that most investors would be better served by investing in low-cost index funds. It is indeed true that the majority of your money would be better invested in low-cost index funds. Number 6, Poor Charlie's Almanac, The Wit and Wisdom of Charles T. Munger, edited by Peter Kaufman. Mr. Buffett was close to this book. It came from Charles Munger, Berkshire Hathaway's vice president, a man Buffett referred to as his best friend and right-hand man. In no small part, Because he said no to some of Mr. Buffett's stupider ideas, Mr. Buffett has attributed much of Berkshire's success to his right-hand man, who has been attributable to much of Berkshire's success. Investors can shoot themselves in the foot when they do not understand human behavior and frailties. Mr. Munger is an expert on human behavior and human frailties. As Charlie grew up in humble Omaha and achieved phenomenal financial success, this book chronicles his growth. Midwest values prepared him well for his long and illustrious career. As a result of his unconventional thinking and astounding work ethic, which are the twin fountains of his remarkable success, his book also summarizes his approach to life, decision-making, learning, and investing. An exclusive section of Mungerisms, Charlie Unscripted, contains a collection of scathing remarks he has made at previous annual meetings at Berkshire Hathaway and Wesco Financial. A specific 20-year period is also included in this book. You will not only receive direct investment tips from this book, but you will also be able to refine your investing skills and identify better investments after reading through Mr. Munger's experiences. Number 7. The Intelligent Investor by Benjamin Graham. This is a classic of value investing that Warren Buffett once called the Bible of investing. I am sure you already know it if you're watching this video. It's the book that started it all for Buffett. One of my luckiest moments in life was picking up that book. Mr. Buffett enrolled at Columbia University after reading it so that he could take classes from Mr. Graham and later joined Mr. Graham's team. Whenever Mr. Buffett is asked about his approach to investing, he cites specific chapters from the book, which provide strategies for using value investing to profit from the stock market. Many famous investors have praised the Intelligent Investor for teaching them how to assess the value of the stock market and pick stocks for their portfolios. Graham's main investment approach, outlined in The Intelligent Investor, is the value approach. It is a strategy for investing that seeks out undervalued stocks of companies that are likely to perform well in the future as businesses. Investing in value does not focus on short-term market trends or stock movements daily. Due to the assumption that value investing strategies are based on the belief that the market overreacts to price changes in the short term without taking into account the company's long-term fundamentals, value investing strategies believe the market is overreacting to price changes. A value investor believes he or she can save lots of money by buying a stock on sale when they know the true value of the stock. As a starter, you need to read this book to learn how to assess the market without being swayed by trends. Number 8. The Most Important Thing, Uncommon Sense for the Thoughtful Investor by Howard Marks. Founder and chairman of Oak Tree Capital Management, the largest investor in distressed securities worldwide, Howard Stanley Marks is an American investor and writer. It explains how to invest successfully and how to avoid mistakes that can ruin a career or destroy capital. Marks illustrates his ideas by using passages from his memos, explaining how an investment philosophy can be developed that fully acknowledges the complexities of investing and the dangers of the financial world. Marks offers insightful insights into the volatile markets of today in a book that is both a memoir and a creed with many broad takeaways. Marks discusses concepts such as second-level thinking. He provides valuable lessons in critical thinking, risk assessment, and investment strategy by candidly assessing his own decisions and occasional missteps, as well as the price-value relationship, patient opportunism, and defensive investing. These values are important to find an investment in a market where companies are still trying to find their footing after the pandemic. Number 9. The Outsiders by William Thorndyke Jr. A book that was number 1 on Warren Buffett's recommended reading list in the Berkshire Hathaway Annual Shareholder Letter 2012, The Outsiders details the extraordinary success of CEOs who took a radically different approach to corporate management. In this refreshing, counterintuitive book, author Will Thorndyke brings to bear the analytical wisdom of a successful career in investing, closely evaluating the performance of companies and their leaders. Thorndyke talks about 8 individualistic CEOs whose firms' average returns outperform their S&P 500 by a factor of 20. In other words, an investment of $10,000 with each of these CEOs on average would have been worth over $1.5 million 25 years later. Some of the companies on this list are highly recognizable names like the Washington Post Company, Berkshire Hathaway, General Dynamics, and more. Humble, unassuming, and often frugal, these outsiders shunned Wall Street and the press, and shied away from the hottest new management trends. The book is a must-read to learn the traits and methods striking for their consistency and relentless rationality that helped these unique leaders achieve such exceptional performance. Number 10. The Clash of the Cultures, Investment versus Speculation. This is another book from Buffett's 2012 letter. In this book, legendary investor John Bogle talks about the changing culture in the mutual fund industry for regular investors like you and me. Bogle shares his list of 10 simple rules of common sense investing. According to Bogle, it may not be the best strategy ever devised, but the number of worse strategies is infinite.